Brian, hope you're doing well. Today it is Thursday, the 30th of September, and we're here for our quick market update. What is going on for the day? What are we looking at? What happened yesterday? What is our plan for the day? Gonna keep it short and simple like we always do, because that's what it's all about. If we keep things simple, we follow a plan, we execute that plan the same way every time, and we get consistent results, which is, I mean, I don't know. I've been preaching this for, God, 8, 9, 10 years now. Just have a plan, follow the plan, get consistent results. I don't know if anybody listens. I do it more for me than anything because it keeps me consistent. So hopefully some of you are taking note of this and you're listening and you're seeing the fruits of your labor. Anyway, what's going on today? Well, here we go. We've got Mr. Powell and Ms. Yellen back in front of the Senate committee today. Senate, who is it? Oh, House of Representatives. Anyway, they're back in front of some windbags to talk about coronavirus and the CARES Act, and probably about the debt ceiling they'll get questioned on as well. Bottom line of all this is, what do we want to do with the market today? Do we want to buy it? Do we want to sell it? Do we want to just sit on our hands? The answer is the same as it always is. You know, we've got some potential high impact news occurring through the day. Might be best just to kind of wait it out, see what happens until after the news is done. You know, after their testimony is completed and they get back to regular trading and regular life, and people aren't waiting to see what sound bites might come out of this. Of course, you know, the flip side is just always do what we do and follow the plan. If you've got a consistent plan, consistent measure for why you're in the market and how you're taking trades, then that kind of solves the problem too, because you're letting the market answer the question for you and make your decisions instead of having to try to interpret or, you know, forecast what you think might be happening based on what occurred there. The market's going to tell you what it's doing. So with that said, you know, best bet, just follow the BTX method. Just follow the plan. You know, and here it is. Here's the plan. Same as it is every day. Here's the plan. Oh, I guess I should go over here to do that for you. We're going to start with the S&P and have a look and see what's going on there. We've got, surprise, a short bias. Still a short bias. 4-hour bias is short. 30-minute bias is short. In order to trade that, we'd like to see the market push up. It needs to get, you know, higher and higher. I'd like to see it make higher lows and higher highs, higher lows, higher highs. And then if it breaks back with some momentum back in the direction of that market bias, we'll take a trade. But it's got to make those higher lows and higher highs first. Remember a couple days ago when they were first in front of the committee, the market just kind of fell off without giving any chance for us to get in and take action. So today we'll see maybe a little different measure. I don't know. No one knows. But we'd like to see the market push higher. If it does, great. And if it doesn't, you know, if our moving average in the short term doesn't cross as it pushes higher, then of course we'll have that opportunity to take the trade as it moves lower. But of course, again, you just have to wait for the setup. The BTX method will tell you. It'll give you a big green arrow above the candle if we're getting a condition where we might be able to take a trade. All right, don't force it. We are in a bit of a channel here on the S&P. You know, over the course of yesterday and even days prior, you've got this bottom down here. You're around 43, 45, and we've kind of got a top that's up here around, you know, 43.75. So 43.45 to 43.75 is a channel. You know, even outside of the BTX method, you could look for breakouts on those areas. But of course, the safest bet is to just play the BTX method as it is. If you're looking for a breakout, the way you would trade it is if it breaks it, you would, you know, like I've said before on the S&P, use a pretty tight stop. Keep your stop about 5 points. Look for a 10-point take profit. If it moves 5 points in your favor, move to break even. And if it goes to 10, just take it off, especially if it's going long, because that's a counter trend trade. But, you know, so there is a little bit of a channel, 43.75, and, you know, down here at 43.45, 43.50 area. All right. So channel, keep in mind, of what we've got there. All right, let's move this down. But the safest bet, though, again, just let the method do its thing, let the market do its thing, and then trade in the direction of the bias with momentum. We're here on crude. Crude, we saw some opportunity yesterday in a long bias, 4 hours long, 30-minute bias coming into the day was long. As we were right over here, right? Just moved to long. And we said, hey, we've got a long opportunity. This flipped over, told us we're long here. Got a long opportunity. It pushed up, so we pulled back, lower high, lower low, pushed back through here, got us into a trade, but then it couldn't hold it, couldn't continue on in the direction, and moved back and stopped us out. So crude initially had a big X on it, but as the day moved on and it moved high enough, we can see it flipped over to a long bias, and at that point gave us a long opportunity, but didn't play out for us. So it took a small loss on that one. Gold is a short bias. It was a short bias yesterday coming into the market, short bias today coming into the market. 4-hour bias is short, 30-minute bias is short. Yesterday for crude, we said, hey, we want to see it push up, making higher lows and higher highs in order to be, excuse me, and able to go short. And we can see it finally did that. It pushed higher, made higher lows, higher highs, and then it did snap back in the direction of that current market bias. And we can see how it pushed on and got us into a little bit of profit down here. So ultimately ended up with that potentially profitable day. The gold trade was a little more profitable than the crude trade over here. So we had a small loss on crude, but a small win on gold that outweighed this loss, and ended up for that potential win for the day over there on gold. What are we looking for today? Same thing. We'd like to see the market float higher like it's doing right now. We'd like to see it push into higher highs and higher lows, higher lows, higher highs, higher lows, higher highs. And then as the market gets moving and we get underway with the regular trading hours, we'd like to see it push back down and break back through one of these higher lows in order to be able to take it short and roll from there. So that's it, guys. Super easy. I know the message is the same every day. As I've said before, trading doesn't need to be exciting. It just needs to be profitable. We just need to have a plan that allows us to win more than we lose and execute that plan the same way every day. So that's what we're all about.